एक मिनट रुक जाओ, रेडी होने दो. चलो ये कर लेते हैं. This could be a great intro.
Hi, I'm Akshay.
Hi, this is Saurabh, and you are listening to the Founder Thesis podcast. We meet some of the most celebrated startup founders in the country.
And we want to learn how to build a unicorn.
Hi, I'm Rahul Pagadipati. I'm the co-CEO of Zebpay, which is one of India's biggest Bitcoin exchange. We help Indians all over the world, not just in India, help them buy Bitcoin.
Crypto, Ethereum, NFT, blockchain. Do all these words sound like Greek to you? Well, they sounded the same to us also till we heard this fascinating conversation in which Akshay Dutt sits down with Rahul Pagadipati, who is the crypto investor and also the co-CEO of Zebpay, which is among the top 3 crypto exchanges in India. Rahul brings to the conversation a unique mix of perspectives. He's a second-generation Indian American who started up a venture in India. He's a very early believer and investor in Bitcoin and cryptocurrency, and being a part of that ecosystem in the US, he's at the forefront of cutting-edge financial innovations that would disrupt how humans transact and invest for decades to come. Here's Rahul talking about how he discovered India and his journey.
So, Rahul, what's the connection to India? I mean, you don't sound like you've grown up in India. Did your parents migrate to the US or?
Yeah, sure. So I live in Durham, North Carolina. So, and I'm here. My wife, she's a cardiology professor at Duke University, and you're right. Like I actually grew up, born and raised in the U.S. My parents immigrated to America, even before I was born. And really kind of fell in love with India, being Indian American, since I was a kid. But then I moved back to India when I was 21, and kind of fell in love with entrepreneurship. Realized there's so much potential there, and moved there to start up a company. And I lived there in my early 20s up until I was about 25 or so. And built up a company which is still around. That company called Anine Healthcare Services employs 400 people, and because of that early formation of kind of of living in India in my 20s, had always loved it, and had been fascinated with the culture and growth and all the. So
what made you want to come to India? Like you did your undergrad in the US, and then.
Yeah.
So this was like a gap year thing. Like you thought you'll see the world before.
So it went to University of Florida. Did my undergrad in the U.S. And this is during the .com bubble or boom. In the late 90s.
Pre 2K.
Yeah.
Right.
And realized that India, there's so much phenomenal engineering talent coming out of India. Like why don't we just go to the source? And so went kind of in a sense went searching for all where all this stuff all these phenomenal people are coming in, and then fell in love with it. But I am now based in the U.S. Other than those 3-4 years where I lived there, spent most of my time in America. But I go back and forth quite a bit. Obviously, COVID has changed that some, but like I would always go to India a couple times a year, and looking for really cool entrepreneurial and ventures and investing. And I would say I consider myself both a entrepreneur and an investor, and probably maybe I'm slightly more of an investor than an entrepreneur. And even though I'm both, they're related, because what investors are looking for is finding great entrepreneurs, and what entrepreneurs are looking for is finding great investors to back them. And the cool thing, because I've done both, you have a good 360-degree angle of how things work.
So, Rahul, I want to know about your entrepreneurial journey from scratch. Tell me about how you ended up starting a company in India.
Sure.
Way back in 1999.
Yeah. So this is when I was, a teenager almost. I was 19, 20, 21 years old, and had always been in love with like building businesses. And I would read books about entrepreneurship. My older brother, he's a couple years older than me. He also loved it too. And so we were reading, books about, and magazine articles about all these really cool people doing technology stuff, right? And at this point, this stuff like Michael Dell, had started Dell Computers. He started in college, and I was in college. I'm like, wow, hey, if he could do it, then I could do it too. So after this is the very early days of the internet, and it was very clear to me the internet was going to be a massive, game changer in the world. And so I thought, how can we do this? How can I make a big impact on this? And then where can I get the most bang for the buck? And it was pretty clear to me that there's a lot of cool innovation happening in America. And back then, these are things like Yahoo and eBay and Amazon.com were out. And really kind of saw that India was going to be like the next big space for this. So there was a really the company's now been sold. It's a company called India World. My brother had met the founder. His name is Rajesh Jain. We almost invested in that company. It was pretty interesting. If we'd done it, would have been a phenomenal return. We would have gotten 20 times our money in 6 months. Just because this is the .com bubble.
But how did you have money to invest? From your parents?
This is just it's not. It wasn't a ton of money. It was just it was me, my brother, my sister, and my parents. And I mean, I would say it wasn't zero, but it was $100,000, $200,000. This is
which in
savings.
Rupees is quite a bit.
Yeah, it's in rupees. Yeah, exactly. But back then, my parents are both physicians. They'd been running a small business. It was, was it vastly successful? No, but was it also tiny? No, it was a couple employees, and it was making enough money where the first step really is, can you start a sustainable business? But that's anything. That could be a food truck. It could be a small, it could be, even a cab, right? You're making enough money that you're not basically, on the street. And so, and the really step from going from there to the next step is basically just lowering your expenses so that you have savings, right? In the sense, if you live beneath your means, right, you can then get capital to invest back into new ideas, and that's what we did. It sounds crazy, but you do everything as frugal as possible. And so we had some money. We thought, where do we want to invest this? India seemed like a really cool idea. The deal didn't work out with the founder of India World. And I was like, well, if we don't do that, why don't we just start our own business? Instead of owning a small fraction, a minority interest of India World, we can own 100% of a business we start up. So kind of told my parents, listen, we were going to put $200,000 into this business. Let's not do that. Give me $200,000. I was 21 years old then, and then I'm going to go to India and I'm going to start a company, right? And the family can own this. And that's what I did. So just didn't use all $200,000 at once. Spent $5,000 and then $10,000 and $20,000. Went to India and then hired a team and built stuff, right? And kind of learned from mistakes. A ton of mistakes. Built the company up to 120 employees, and then we're making money. Then the .com crash happened. We lost money. It went back down to 3 employees, right? And then
within a year you hit 120 employees,
within about 18 months. Yeah, within about 18 months.
Wow. Yeah. What did you start? What was the business?
Yeah, so it was a bunch of different stuff. We were just throwing services stuff, building products. This is lots of different things. And
so like a mini Infosys.
Yeah, it was, we were trying to do a mini Indian version, like Indian Yahoo, right? And some of the things were working, some of the things weren't. And then what wasn't working?
You were in services or products also?
Both, right? Building, an e-commerce electronic bookstore, right? Things like that. Like I said, during the bust, realizing that, hey, listen, we can't spend more money than we're making. Right, because a lot of the things like this, you should spend more. You should figure out how to borrow or just lean forward. That's why we had a downside. We had, when we dialed it back, we're like, hey, listen, let's just only spend money, only spend what we can. And that's why we went down to 3-4 employees, focused on services, which was money making, right? And then we kind of moved into healthcare services. And so healthcare, the reason why I picked that is both my parents are doctors. We kind of knew the healthcare space decently well. And that's actually what worked. So what ended up happening was in my, at this point during the low point, I was like, well, what do I do now? It was a good time to go back and finish up college. Also went and got my MBA, my law degree. But I was still the CEO of this company. And, we had 3, 10, 15 employees around then. We would be doing medical billing services or medical billing software or helping people, figure out how to do like, coding online and things like that. So during this time, this is on the entrepreneurial venture of what became big. The really big company is called Freedom Health, and my father, my brother, I, and my sister, we kind of all worked together and said, hey, listen, insurance is really the best place to be. And so my dad, he's a risk taker, decided to basically take all of his net worth. We took all of our individual net worth, we put it all together, and we started a company called Freedom Health. And this is the thing about having, you're talking about a background in the story is that, we, at this point, we'd had multiple failures. So you could say Anion wasn't a failure, but it definitely wasn't a win. It was like a zombie type company at that point. And you have to go through lots of ups and downs. But my dad had started 25, 30 companies of them, and 90% of them had failed, failed or not done great. And this was like, this was the 31st company. And so
these were all like side hustles or like
no, yeah. So I would say yes and no. The first business that I would say was doing better than losing money was a clinical lab. And this is my mom. She was a pathologist. She ran a clinical lab. And this is a small business. This is a business that maybe did like $2 million in revenue, and it probably made let's say $300,000 a year in profit, $400,000 a year in profit, right? So not amazing, but not tiny. It's enough to live a pretty good life in America.
Comfortable, right? Yeah.
And so,
yep.
From that small lab, which was making a little bit of money, right? My dad said, you know what? I'm going to take my entire retirement savings and the cash flow from the clinical lab, and let's go start a health insurance company, right? And he had all of us kids, kind of put in time. My brother moved back from New York from investment banking, and we started an insurance company. We just basically took our entire net worth and said, you know what? Let's see if we can. And it was about a couple $1 million, $2 million, $3 million altogether, but $2 million initially. And we started this company called Freedom Health. And what Anion became like one of, in a sense, because we knew how to run
a back office for Freedom Health.
Yep, it became kind of the back office for this company. But Freedom Health is really the one that took off, and this company became honestly massive. We went from 0 to $100 million in revenue in about 3 years, right?
Wow.
And
without any external funding.
Yeah, through like lots of just stretching and maximizing. And we brought in a couple of smaller shareholders. We eventually cashed them out. And at this point, we had basically spent literally every single dollar we had at the clinical lab. Every single dollar we sold all of our real estate. Like we had a couple. My parents had a second home. They sold that and put everything we got into this. At this point, probably about $10 million of capital had gone into the business. And
this is what, like reselling insurance or like an actual full stack?
It's a full-on insurance company, yeah. Full-on health insurance company, managed care company. And so
with like underwriters and like the whole deal. Wow.
Yep. And so it was complicated stuff. We grew it. You basically had to give amazing benefits. So we weren't profitable. We were losing money, but we were growing. And it's called Freedom Health. We grew it up to at this point. We realized that, hey, listen, we're out of ammo, and we decided we should probably find someone who can then become the majority owner. A guy named a really cool entrepreneur named Dr. Kiran Patel had kind of been around the block before. He had sold his business for $200 million several years ago. He had a non-compete. It expired. He came in and he bought the majority stake of Freedom. So we stayed on as minority partners, and he bought the majority stake. And we basically took our money off the table, but retained equity, a big minority equity to take the company. And that, at this point, was roughly 2007, 2008, right before the financial crisis. Very lucky timing by doing it right before everything had tanked. And he came in, and he was this is, and at this point, I just finished my law degree, my MBA at Kellogg, at Northwestern Law School. So I went back to grad school, kind of was still running Anine, still helping out with high level on Freedom Health, and then we sold the majority stake of Freedom to Dr. K. He grew it along with our help from 100 million in revenue to almost 2 billion in revenue.
Wow!
Right? And it became the largest private health insurance company in America. At this point. And so over 10 years, it took about 10 years from 2008 to 2018. Lots of hard work. Same thing. Every incremental dollar of profit went back into growth. We raised a little bit of capital. Dr. K put in some money. We raised about another $25 million of total capital. But other than our capital and that $25 million of capital that we raised, there's no other money that went in the company. And this company, we eventually sold for $2 billion, almost $2 billion,
wow.
about $1.8 billion. And then during this path, what I was doing is I really loved entrepreneurship, but also loved investing. And so what happened was that within the family, my parents, who were more physicians, kind of stepped back from day-to-day operations. My brother did move to more as an operator. Like we would invest in companies and businesses, and along that path, I took more the investment role, where I would basically like a value investor. Try to value businesses. If we had any excess cash that our business would throw off, reinvest back into it. If not, then we would then just kind of sit on cash or reinvest back into our core operations. And so if we find a great idea, we'd invest. And it was a lot of small public companies, like these are small companies that are worth less than $50 million. And for 3, 4, 5 years, I really just spent.
And you would buy a minority share or like a majority share?
Significant minority stakes, like between.
Okay.
And these are public companies, so called between 1% to maximum 10-15%, but $1 million to $10 million of capital would go in. And like I said, I fell in love with investing. Would be reading annual reports and understanding about cash flow statements, balance sheets, things like that. And during this path of me, really honing my investing skills, stumbled upon Bitcoin and blockchain, and Anine was still going on. We had the Anine team. I had one of the 3-4 people team learn about Bitcoin. What is mining? How does it all work? And they spent a ton of research on this stuff, and said, hey, they came back with this is really interesting, but we're not really sure what it is. And I said, okay, well, let's research more. And when we started researching more, I realized that this is something that could vastly change health insurance, which is what we were still doing then. And so,
like blockchain as a technology,
blockchain and smart contracts could dramatically change the way health insurance could work. And so, slowly, step by step, convinced the family that we should make major investments in the space. By the time that we sold Freedom Health, we had made a decision to move, other than healthcare, our other masthead of investing would be in blockchain, and so put basically a significant amount of capital into let's say crypto blockchain investments. Of that, very simple, it's Bitcoin and Ether. Those are very simple. Let's say public tokens, almost like we believed in store of value, and we believed in the idea that smart contracts and decentralized apps were going to be a massive thing. And we thought these two are the leaders. They've already got massive market share, and they're going to continue to win market share. And then I knew about Zebpay.
What price did you buy in Bitcoin?
Sure, it's all over. We're still buying today, but we first started buying. I first heard about Bitcoin back when it was about $5 or $10, but we really didn't buy it until it was about $7,500.
Right? Amazing.
So and it really is funny because like when I bought, let's say at $100, I was like, oh man, this thing used to be $5 or $10, but so it was like at 10x back then, right? And so but we've been buying back then and holding on and still buying now. And so I knew about Zebpay and the Zebpay team, and I met the founders and the management team at a Bitcoin conference in New York. And at this point, this is right when the RBI decision had happened on kind of making Bitcoin per se very hard with banking, right? People were saying it's illegal. It wasn't made illegal. It was just they put up a lot of, let's say, hurdles in place for. Yep. and convince the founders that, hey, listen, we're entrepreneurs and investors. We'd like to buy a significant minority stake in the company. We decided to do it at that time, and then.
Tell me a bit about Zebpay's history also. Like,
Sure.
How did it start? And
so
I believe it's almost like a 7-year-old company now.
Yeah. So Zebpay, really cool company, founded by 3 phenomenal entrepreneurs. Maheen Gupta, who's really more the CTO role, Saurabh Agarwal, who was the founding CEO, and Sunny Goenka, Sandeep. He was more like the CMO and COO. These 3 guys all have entrepreneurial backgrounds. Maheen had actually started the very first Bitcoin exchange in India. It's called buysellbitco.in, and we actually bought some Bitcoin from him back then too. So I knew about him, and I knew he was a very solid guy. Same thing, because of regulatory hassle and whatever. He kind of like shut down buysellbitco.in, and I would say that kind of morphed into Zebpay, right? And Zebpay ended up by building a phenomenal product, ended up becoming basically the largest Bitcoin exchange in India during the 2015, 16, 17 run up in Bitcoin prices, and it had 65-70% market share. They were doing really, really well, and then all of a sudden the door got slammed shut with the Reserve Bank of India, right? And then they tried to go global. They tried to build a global product, but it's hard. It was really hard competing against Binance and Coinbase, and the founders kind of decided, hey, listen, if we can't really operate in India, it's not really worth doing this stuff. And so they kind of wanted to step down. I was like, well, listen, if you guys can step down, but I don't want to quit. I think it's really important that that Zebpay stays alive. And
when did you invest in Zebpay?
The first investment happened in 2018, and then in the end of 2019, basically in 2020. January 1st, 2020 was when I bought the majority stake of Zebpay. All right, and same thing happened in this scenario is that I told the family, hey, listen, this is not the time to quit. We should really be doubling down on Zebpay. The family office, which is really we now have a family office called Aeon Capital, which is it's all just family run capital. They didn't want to do the follow-on investment in Zebpay, but I believed in it, so I kind of took my own capital and then bought the majority stake. And that was roughly about a year and a half ago, or January.
So, what made you switch from being an investor to an operator? And putting in your personal money into it, what made you want to do that?
It's simple. Let's say love of Bitcoin. Right. And so I felt, this is before, I was negotiating this before YZRX had sold out to Binance. I had felt that I'd seen what happened with Mt. Gox, and Mt. Gox was another Bitcoin exchange, which kind of had a ton of market share. And it really kind of hurt the Bitcoin industry when it went down. And I was like, you know what? If Zebpay quits, this is bad for the industry, bad for Bitcoin, bad for India. And decided, sometimes you just have to, it's like in wartime, times of war, times of uncertainty, a leader just has to step up, even though you realize that I'm not probably even the best person for this, but if no one else does this, then we all fall down. And so decided that this is something which I was passionate about. This is something that I wanted to run until the very end, and convinced my wife that this was a thing that we should do, and it was something that I loved doing, and she luckily believed in me too, and we did it. Decided just to jump into the deep end of the pool.
Yeah. So, what was the peak of the the value of transactions through Zebpay pre the RBI ban coming in, or the RBI restrictions coming in?
Yeah, sure. We did about $3 billion in volume total. The peak would have been maybe about 30, 40, $50 million a day, maybe about 20, $30 million a day. And like I said, it was massive. Zebpay was definitely one of the biggest exchanges in the world at that point. Right.
Wow. Okay. And so, during that, like the long winter of crypto.
Yeah.
So, what did it come down to? And like tell me about that journey.
Yeah, sure. So exactly. So the RBI decision happened in, let's say, spring of 2018. Zebpay made the strategic decision to kind of expand abroad, but it was very hard, right? Because we're competing against massive players.
You invested pre RBI decision or post?
Post, like right after that, right? We invested roughly July of 2018.
Very, very contrarian call.
Exactly. I realized that you know what, we believe in the company, believe in the team, believe in the brand, and we wanted to come. Like I said, we want to invest into India and into blockchain. And so during the crypto winter, it was awful. Like this is Bitcoin had taken from $20,000 down to $3,000, and Ether had gone from like $1,400 down to $100. And luckily, because I'd been through a couple of cycles, I realized that this is something that we believe in. So I convinced the family, hey, listen, I don't know when it's going to bottom, but we said as long as we invest over the long run, we'll do fine. And so that's what we did. So we were heavy buyers of Bitcoin and ETH back when everything was falling down, right? And realized that. So now we're not just Bitcoin and Ether. We made investments in Zebpay. The family office also made investments in a company called Brave Browser. It's a kind of I don't know if you've heard of Brave Browser.
Privacy focused. Yeah.
It's a privacy focused browser. We made investments in Coinbase, in a lot of really cool funds. These are like things like Pantera and DCJ, crypto focused, blockchain hedge funds, and invested heavily, and really made, like I said, blockchain, the other focus area for the family office other than healthcare. And then during this past winter, it wasn't, let's say, it was cold and dark and, depressing, but you just had to put one foot ahead of it itself and then move forward. And I would say because it was cold, dark, and depressing, that's why I think, a lot of the old employees and the founders wanted to get out. So there's a lot of people left, a lot of the best people left, right? And so, but luckily, hey, listen, a lot of really, really good people, phenomenal people stayed on, and they believed in the product, believed in the company. And I was really lucky to meet these people. And then when I decided to become CEO, like I said, very lucky these people, believed in the vision. They stuck on board, and we were 40 employees back when I became CEO, and now we're almost 200. We're 180 employees now, right? And so got lucky, focused hard on fixing the product, making better and better. And the RBI decision was overturned by the Supreme Court, 4 months after I became CEO, and then it was full steam ahead. It was just rebuilding brick by brick. The big issue is that we lost to our lead as being the number one player. Binance, which had acquired YZRX, which is a very well-funded company, gave them a lot of capital and also, let's say, technical infrastructure on how to scale. And a couple other companies that are out there are also doing well too. But really what we realized is that, we just have to stick to our core principle, what we want to do, and we'll do fine. And that really is, providing phenomenal service, trying to, up the game on the technology and the product, right? And doing it at a very, very low cost. And so that's what we're trying to build, build basically the best way you can buy Bitcoin, at the lowest possible price and the best possible service.
If you like to hear stories of founders, then we have tons of great stories from entrepreneurs who have built billion-dollar businesses. Just search for the Founder Thesis podcast on any audio streaming app like Spotify, Gaana, Apple Podcasts, and subscribe to the show.
So, what has the build-up journey been like? At the lowest, what kind of monthly transactions were happening, and what is it today?
Yeah.
Tell me about.
So the company is doing really well. It's phenomenally profitable, and we actually will plan on making some of these documents public. But didn't even raise that much capital, but doing north of $35 million in revenue, almost say $25 million in EBITDA before I came on board, right? And this is a business which people were lining up to invest in. We had a lot of really famous Silicon Valley venture capital firms wanting to invest into the company, but then, like I said, they backed off once the RBI decision happened. And then really your question on the revenue number exactly is it basically went to zero. During the time when we invested, it went to nothing. And that's a big reason why, we decided, do we want to stay afloat? And I mean, Zebpay, honestly, for other than like a week or two, I mean, there was a good chance that we just would have just shut down, right? And said, you know what, it's not working. We're going to return money to shareholders, and that was, in a sense, the plan. And what I realized is that, you know what, this is when I came on as CEOs. I was like, all we have to do is we just have to make enough money to not, we just have to survive and not die.
Right. Yeah.
And that was the goal. The goal for me coming back on board was thriving. It was not thriving. It was just surviving so that we could live to fight another day. And then, but since then, we've come back and we've done over $1 billion of volume a month. I don't know how much we're doing each day, but we do, let's say, between 10 and on really good days, $50 million of volume per day. I think we're probably maybe the third biggest exchange now. We're number one. I think YZRX is probably number one. Maybe I'm seeing CoinD6 is at 20 million. We're at 11.2 million, right? So and YZRX is about 60, right? So still doing a ton of volume, but like I said, our goal right now is to build back more market share, drive the cost of buying crypto down to almost to zero.
How would you do that?
Yeah, so this is the innovation on the business model, and I've been really figuring out how can we build a long-term sustainable business, and the big asterisk here is what we've done now is we have a phenomenal leader named Avinash Shekhar who's a CFO, then became the president, and now he's the co-CEO. And so he's still fine-tuned, but the core point on how do we actually drive the cost down to zero, you kind of need not just capital, you need business model innovation. And my thesis on this is that if we can become like a company which is more mutual focused, right? A company which is in a sense owned by its members. And what I mean by this, you know what a cooperative is, is we want to become more of like a Bitcoin cooperative in the longer run. And what my intent is, because I'm the majority owner of Zebpay right now, is I want to figure out somehow creating a trust, which will then give economic benefit of our, let's say, our company back to not just the shareholders, but back to our members. And by members, I mean our customers. And there's a lot of complexities here. We're trying to figure out exactly how to do it, but we basically want to somehow have beneficial economic ownership back on the blockchain. And the way you can drive, how can you drive the costs of buying something down to zero? It's kind of like this. Imagine if you've heard like a cooperative bank. What a cooperative bank works is that the actual people who are doing the deposits they're the owners, right? So their cost of funds is lower. So at the end of the year, if we can basically take half of the money that we're making and give rebates back to customers, right? I envision that we can be a way, way, way low cost provider. The other way you can do stuff is that you can make the trading fee zero, and you can also move some of the income into DeFi. You help people get money through decentralized financial products. And DeFi is really cool because you have things called liquidity mining. People are probably wondering what that is. It's a way of adding capital onto the blockchain, and you're basically getting paid because your money is tied up into a smart contract versus being tied up in cold storage. I don't know. Are you familiar with the word cold storage and what it is?
No. There's a lot of stuff which you'll have to break down and simplify.
Yeah, sure. So really, when you own something like Bitcoin, you can kind of own it in like three different ways. You can own it, let's say, in cold storage, which is really you've figured out a way to own the private keys. This is like your password to your Bitcoin in a secure manner, which is not really ever touch the internet. It's very hard for a hacker to get access to these because these keys are not directly connected to the internet. Like they're in it's a seed key connected offline in a sense.
Right.
The other way you can do it
is cold storage.
Yeah, it's called cold storage.
Okay.
The other thing you can do is you can keep your Bitcoin in a centralized provider, something like a Zebpay or Coinbase or a BlockFi. And what we do is we then keep a good bit in cold storage. We keep some in warm wallets, hot wallets. We also lend some out to other customers, right? And the benefit of this is that if you lose your password, you can come back to us. The also benefit is we pay interest to it. So we have a really great service called Earn and Lend, and you can make interest off of your crypto, right?
Okay.
And then
Okay.
the
Okay.
last thing you can do is, if you want to, you can keep probably your crypto on, a decentralized type wallet. Something. Imagine like a Brave browser, right? Brave. You can use a crypto wallet on Brave. You can use a crypto wallet like on MetaMask. You could use a third party wallet, a decentralized wallet. There's a bunch of these, right? And so these type of wallets are also, but you shouldn't really put a ton of money here. You should probably just more. This is more like this is the type of money you'd actually have in a real wallet, like a few $100 at maximum, right? You shouldn't keep a ton of money in there. The most amount of money you should actually keep in a vault or in a storage, right? So what Zebpay is, yeah, go ahead.
Yeah, I still didn't get what is a decentralized wallet.
Yeah, a decentralized wallet would be you can actually put a wallet into your browser, right? And
okay,
what this means is, and this is what Brave is on. Brave has a crypto wallet built into the browser. So when you're browsing, literally you're on, like, it's a publisher, and there's a paywall there. You click a button. The Bitcoin doesn't really live in your wallet, but it's a simple password you put in, and it's kind of built into your browser, right? And this is like a decentralized wallet. It's connected to, in a sense, to Bitcoin, but it's not as secure as what a cold storage wallet would be, right?
Okay,
yeah.
Got it. Yeah. Okay. So these are the three ways in which you can own Bitcoin, and you also spoke about DeFi, decentralized finance. What exactly is that? Can you break that down?
Sure.
Also?
DeFi is fascinating to me. It stands for decentralized finance, and let's say it's the opposite of centralized finance. And centralized finance is, I'd say, the current system we have right now. It's a current system which is widely used. It's there's central banks. They work with large, let's say blue chip retail banks, and in India, these are things like ICICI, HDFC, things like that. And you also have smaller regional banks as well. But like I said, the biggest banks have, the best relationship with the central banks. And this is it works in a lot of different countries, right? And so what DeFi works is, you don't need decentralized finance. You don't need a counterparty to do actually financial activities. And so when you go to a bank right now, you give them your rupees, you give them your dollars, and they will then take that. They use their own capital. They'll then meet someone who wants a loan, a house, and they will underwrite a loan and say, listen, you give me the title to your house, and I'll give you a 50% loan to value. Your house costs 1 crore. You have 50 lakhs down. I'll give you a loan for 50 lakhs. And if you don't pay me, I'm going to foreclose on your house. In the same way, the way DeFi works is, you have 1 Ether or 1 Bitcoin, right? And imagine it's 1 Bitcoin, and you can actually go into a smart contract, and you can lock up your Bitcoin into a smart contract. Say, my Bitcoin is now worth $40,000. This smart contract will then loan you 50% loan to value. It'll loan you $20,000. And but the price of Bitcoin can fluctuate, right? So if the price of Bitcoin goes up, great. It goes to $100,000. You're still well collateralized. But the price of Bitcoin drops down to $30,000. You either have to give in another $10,000 of Bitcoin, or what the smart contract will do is, it will just liquidate $5,000 of your Bitcoin, right? And now, so now what happens? Your loan to value is better, right? And it's just auto executes. It's pretty cool. Like, someone can come in and bid on your Bitcoin. And so and DeFi is pretty phenomenal, because now there's like, $50 billion in DeFi. It's more than that. There's massive amounts of capital in DeFi, and most of it is happening on Ethereum. But there's other chains who are doing a lot of really cool stuff, and this is really where I say I think the world's going. The world's moving into a DeFi world. Right.
Okay. So how does this tie into your business model innovation at Zebpay?
Sure. So that's exactly it. So what I envision happening is, DeFi is complex. It's kind of hard to understand, and people want a lot of hand-holding, right? And so what I think Zebpay is doing is, our goal is, because we are in many ways a fiat on-ramp. We're helping people get into crypto using, let's say, traditional fiat rails. We want to make DeFi easy, right? And so we're working on a lot of different really cool things like that. Like, for example, most people want DeFi type returns. DeFi can give you great returns, right? but they don't know how to use a smart contract. They don't know how to use a wallet. So we want to be able to come in and you just put your money in Zebpay, and Zebpay will do all the complex stuff for you, and you'll get a good return. We'll give you the interest rates you could be getting on DeFi. I envision something like that. Like our goal is to make it really easy and simple for people.
Okay. And how far along are you in that product journey? Like,
we're doing well. So we have kind of two major products right now. One is called Zebpay, which is our main flagship product. The other product is called Zeb.com,
which is essentially a transaction platform. You can buy, sell, and store crypto on the Zebpay platform.
Yeah, exactly. Yeah. The other product is called Zeb.com. It's really like a simple version, like a much easier version to buy this stuff. And we already have a new product right now where you can get interest, and that's what a large part of the interest right now is being put into DeFi, right? And eventually what will happen is you'll be able to borrow and lend from Zebpay, but even the funding is going to actually come from the DeFi protocols, not from customers themselves. So you'll be able to come in, deposit some Bitcoin. If you have one Bitcoin, you need some money to go pay a student loan or pay for your daughter's wedding. You can just borrow money on your Bitcoin and pay interest off it. So it's actually live today, but like I said, we're constantly making the UI and UX easier and better. We brought on a phenomenal new tech team that's really, we're upping our game on all these things. Yeah.
Okay. So, what is the? Are you targeting Indian customers only for this, or is this like a global product?
Yes, we're definitely a global. We're one of the few exchanges which does have a global say presence. We're probably 80-90% in India, right? And we're definitely targeting India. India is where we want to win and dominate, right? But in the longer run, the blockchain and crypto it's a global phenomenon. So what I envision happening is we become like a dominant brand within the South Asian framework for decentralized financial services, right? So it's easy for you. It's easy for anyone who is. So our mission, we talk about this, is financial freedom. We want to figure out how to we're fighting for financial freedom, and we think the best way is through blockchain, and specifically in India. So we want to win in India, but like I said, I do envision in the long run, the next couple decades, is we probably have a South Asian bent, but we are working globally in places like the United States and Canada and the UK. Right now, we're in Singapore, Australia, and India. Those are our core markets, but we envision expanding. That's where we're legally measured. You can actually buy crypto in pretty much every place other than in America on crypto pairs. But we envision actually having crypto fiat, where you'll be able to buy Bitcoin for dollars or Canadian dollars pretty soon in the next year or so.
Okay, so how did you do the build up again? Like you told me that the team went down to a pretty small number, and now you're back to about 200 people. So tell me about what all things you did once you you took charge of Zebpay.
Sure. Yeah, that was the hard part. Like, see, back when during the crypto winter, convincing people that the spring and summer is coming is hard, right? Because it's totally dark. So we just step by step. So luckily, a lot of people believed in the company, believed in the team, believed maybe in me as a leader, and convinced, like you say, 4 or 5 people to come join with us. They mostly stuck with the company, and really at that point, it's just step by step. It was just like I said, stopping the bleeding, making sure we're not losing money. Once we had stabilized, then just brick by brick and like phenomenal person by person, going out and recruiting people and saying, hey, listen, this is what we're trying to build. We're trying to win. We want to build for the long run. And can you help us do it? And luckily, the team, it's amazing. It's getting better and better, literally, each day, right? We have phenomenal people spread around the world. There's people in Australia, in Canada, in Europe, in America, in India, in Singapore. We have really great people spread all over, and just amazed at our team. In fact, we the word we use within Zebpay is this idea of ohana, and ohana is a Hawaiian word for family. And even though we're corporate in form, we're trying to manage. We operate within an ohana framework, and the idea there is we want win-win-win for all stakeholders, and I look at this as like there's three major stakeholders for let's say in most, let's say, company type frameworks. There's the shareholders, there's the employees, and then there's the customers. And usually in most companies, they're kind of, hey, listen, your job is to create and keep a customer, but in the end, you're trying to drive shareholder value, right? Our ethos is a little bit different. What we want to do is we want to kind of have win-win-win where we kind of treat them all equally. We all treat everyone like a family. So our framework is, if you treat customers, employees, and shareholders like family, like with the kind of like this Ohana ethos, and you actually get incentives and you get economics in place, this is where you can get win-win-win type frameworks. And what I mean by that is, so right now customers, they want what's best for them, which is understandable. They want the highest product, the highest quality product, highest service at the lowest price, right? Same thing with employees. Employees want great work environment. They want to get paid well. They want a really great coworkers with happy people with kindness. And shareholders, same thing. Shareholders want to invest in companies which have great missions and stuff like that. And so if we believe we can connect all three of these things, we can get honestly like a inflection point in growth. So now this is what Bitcoin has done. Like Bitcoin, it hasn't really raised any venture capital, right? It's been able to become a $1 trillion asset because they've done a great job of connecting kind of product market fit. And I actually remind a lot of the Zebpay team is that don't look at Zebpay as being a company. Look at us as being an extension of Bitcoin and Ether. Like our job, our ethos is that we're trying to blockchain the world through financial freedom. And what this means is if we make Bitcoin and Ether, if we make these amazing technologies widespread, we're able to spread them all over India. It's a win-win-win. And so that's what I envision happening. I envision happening over the next couple of years is that Bitcoin and Ether hodlers, or people who hold this stuff, are actually, they automatically get economic benefit in what Zebpay does. And so if you believe in Bitcoin and Ether, then you're going to believe in Zebpay, because Zebpay is going to basically give you kind of extra returns back to you.
Okay. So right now, Bitcoin is pretty much like a rich man's plaything in India. Maybe it's not the case in the US, but here it's like people who have some money to burn are the kind of people who invest in Bitcoin because it's high risk and it is an unknown. It's a mystery right now.
It's considered high risk. No, I get one big thing which I want to really clear up is that a lot of people think that when you buy Bitcoin, you have to buy one single Bitcoin, right? I don't know. Actually, did you know that you can buy actually a fraction of a Bitcoin? I don't know if you knew that or not.
Yes. Right. Yeah.
So I would say many people think that it is. It's already run away, right? It's only for rich people. The fallacy in that, and that's what I'm saying, thought process is that, remember how I told you when I bought into Bitcoin, it was about $100. It had already gone up 10 times, right? And the legal team or the compliance team would probably say, is it like, everyone's talking about, where's Bitcoin going? Is it undervalued or overvalued? I don't know if it's undervalued or overvalued, but I do know this. It's undervalued for the long run, meaning that Bitcoin price is going up. It has been in the past, and I'm pretty sure it will in the future. The reason why is the supply is limited and the demand is going up. And so I think Bitcoin is going to go from $40,000 to $400,000. When? I don't know. It might be 1 year. It might be 5 years. But the thing is, it has a much higher chance of increasing in value than the rupee does, or the dollar does, or even real estate, right? So let's say your current investments right now, you might be buying some sort of equity stock, let's say Apple stock, or you might be buying some piece of real estate. It's hard for Apple to go up 10 times in value. Apple's already a pretty big asset, right?
Right.
So if you look at the risk reward of what Bitcoin offers, right, it's still massive, right? Meaning that Bitcoin as a brand is very likely to be the most valuable brand in the world, right? And people are like, what do you mean? Yeah. So I'm going to say, just to pop quiz, right? So what do you think the most valuable brands in the world are right now? Like, what are the biggest brands? Has lots of brand value?
Google, Microsoft, Apple.
Yeah. right? That's exactly it. Google, Microsoft, Apple, Facebook. Okay, now, what are the biggest brands? If you go ask most people now have heard of Bitcoin. It's pretty amazing, right? Bitcoin, like as a brand, is kind of like what Google was in 2005. People had heard of Google; they didn't really know what it was. Like a lot of people, but like Facebook in 2008, 9, they knew what social network was, but they weren't really using it. Bitcoin is the exact same way. People heard of Bitcoin; they think it's expensive, but man, their brand value is just going to grow. As the price goes up, as more people are using it, and same thing with Ether. You've probably heard of Ethereum, right?
Yeah.
But then, now, other than those two, to show you about brand value, what are the other coins or cryptocurrencies that you've heard of?
The ones that Elon Musk talks about.
Yeah, Dogecoin, right?
Yeah, Dogecoin. Yeah.
Have you heard of any other ones?
No.
Right, and it's really interesting. The reason why you're exactly right is that people don't care about the 5th or 10th or 100th coin, right? And that's why Bitcoin will continue to accrue value, because people want high reward plus also safety. And that's what Bitcoin offers. Bitcoin offers really good growth, but because it is a blue chip company, it's a blue chip asset, it won't go down as much anymore. In fact,
but in a way, couldn't you say it's a collective shared delusion? I mean, see, owning Apple is owning a revenue stream. Apple makes products, sells those products profitably,
Yeah.
But what are you owning when you're owning Bitcoin other than like a shared agreement and understanding?
You make a very, very, very good point, right? So Apple, when you own Apple, you own a share of Apple, and Apple is a company which sells products and services, right? But it is that, but it really is just a brand. Meaning, you're only buying an Apple product or service because you believe in it, right? Meaning that it's like Nike. You're only buying a Nike shoe because you believe in it, right? Now, what you're saying about Bitcoin is, Bitcoin is not. It doesn't sell iPhones or shoes, but you got to realize Bitcoin's a brand. It stands for like financial freedom. So what you're buying when you buy a Bitcoin is this. See, when you own one Bitcoin right now, you can do two things with your Bitcoin. You can sit in your Bitcoin, just put it in cold storage, or you can actually lend it out right now, right? And so imagine you own one Bitcoin. It costs $40,000. Literally on Zebpay right now, I think you can get 2%. I had to go look. It's like 1 or 2%. So in some places you can get
2% per month or like
per year. Now you're saying, oh, that's awful.
Okay.
It's not great because I can get 10% on my rupees, right? The nuance is you can get 10% on rupees, but your rupee is going to depreciate against the Bitcoin, right? And so what Bitcoin gives you, it actually can give you interest in, and if you want to keep that interest in rupees, keep it in rupees. If you want to keep it in Bitcoin, keep it in Bitcoin. So with Apple right now, Apple will give you dividends, and same thing, Apple will give you like 1-2%. So I'm saying is the actual the income you get from your Apple stock is actually less than the income you get from your Bitcoin, right? You actually can get money off of your Bitcoin if you choose to, right? It's not.
Who are the people who? How do you pay interest on Bitcoin? Who's borrowing it?
Yeah.
And why do they borrow it?
Yeah, sure. So there's a lot of people that borrow it. They borrow it because they want to basically short it. One, they want to hedge against it.
Okay.
Right. Or like the other thing is people are like they're providing as collateral to do a loan. For example, like I said, like how you could borrow dollars using your Bitcoin, right? Just like some people want to borrow Bitcoin and then use it for buying more crypto or buying more Ether or selling against something. So there's a lot of different people. There's a lot of different use cases. There's tons of them.
Okay. And hasn't RBI again tightened the screws? I believe that banks have now not allowed.
No, I would say we're still operating most banks are pretty open stuff. So it's really honestly a little bit musical chairs. Some banks want to.
First, tell me, what is the mandate from RBI? Like, what is it that they're?
It's fully legal. Now? Bitcoin's totally legal. You can buy it. Like, it's still like in a sense in limbo. That there's no clear regulations on. It's considered a digital asset. They're not recommending it or not recommending it. So but the core point is that it's not illegal. RBI's do it.
And
yeah.
how is RBI discouraging it? They're telling banks not to allow people.
No. I say RBI is they're not discouraging. It's just that they're not promoting it, right? And so some banks still believe that the circular is valid. Luckily, they cleared this up a few months ago. Said, listen, the circular has been struck down by the Supreme Court. Bitcoin is legal. And
what did that circular say?
The original circular was that Bitcoin is in a sense highly speculative. We don't condone it, so we're going to cut off banking services to all Bitcoin and crypto businesses. But then the Supreme Court overturned that, said it's too restrictive. And since that time, we have some good banking relations. A lot of banks do accept it. Right? A lot of banks are taking it now. Right, but like I said it can change the women, and so luckily we've been around for 7 years, for a long time. We are a blue chip, right? Say crypto financial services firm. So banks love working with us, and we're always opening doors. We're always talking to new banks, and we give them they're great partners for us, and we're great partners for them.
So if I was to want to invest on crypto through Zebpay, then I would just be able to use my debit card and do the transaction.
Yep, exactly. You connect, you log in, you do your KYC, you connect your bank account, and you just buy Bitcoin. It's simple. You just log in and you just come in and you can buy some. And in fact, what we recommend is basically dollar cost averaging, like buying small amounts of Bitcoin over the long run. In fact, that's what I do. Right? I actually every single day I buy a little bit of Ether. Right? And if you do this strategy, see, the thing I remind people is that, people are like, oh, wow, Rahul, you knew about Bitcoin back when it was $10. Yeah, I did. And I did nothing about it for the first year, right?
Right.
Imagine if I'd put in like $1 per day back then. That's it, just $1 per day. And the same thing happens now. If you put in $1 per day and do it over the long run, you're going to get phenomenal returns. And that's what we recommend. And that's what Zeb, our new app, is doing, right?
And this can be automated.
Yeah.
Like I can just give a mandate and it will just debit that whatever X rupees every day.
It'll debit 100 rupees. And we have 1,000 people that are doing this right now. And it's growing every single day. We recommend dollar cost averaging over the long run. And if you do this, I believe this promotes financial freedom in the world. Right.
Yeah. And how are you going to make it more ubiquitous in India, more accessible to people beyond just, say, tier 1 city folks, like say maybe the top 1% of India currently would be either investing or considering investing in Bitcoin. How do you go to the next 10% or, the next 30%?
Luckily, Zebpay now has millions of users. And so, but we want 100 million users, right? It really is education, right? We're educating people that, hey, listen, if you want to save for your kids and grandkids and financial freedom, this is one of the best asset classes in the world. It absolutely positively is. And you should have some exposure. You should buy little bits. And if we educate people by getting, really good influencers and, really educated, say, financial advisors, right? That's how we do it. And so I think what's going to happen over the next couple of decades, people will not just own gold, not just own stocks, not just own, real estate. Bitcoin is going to be at one of the central points of a really well diversified, financial, let's say, of a person's net worth.
So what is your customer acquisition strategy? Like, do you do paid ads or do you do social media or
it's all of the above. And it's a mix of, let's say, paid media, SEO, advertising, the other thing is referral marketing, really upping the game on getting people to refer to, more of their friends and family to join. And it's good. We're adding. Go ahead.
What is what's the strategy there? Like, what is your referral plan like?
Yeah. So the main thing is people get 50% of the fees of their of anyone they refer for a certain amount of time.
Okay.
But like I said, what we want to do ideally is not just pay dollar amounts, but also give us like I said, my goal is driving the cost down to zero. So like and we're still working with the team on this. We're trying to figure out ways of like maybe adding in like some sort of a token with economics, which benefits the more people you refer, the more benefits you get, right? And we haven't figured this out yet, but it would be something like that. Imagine that if you refer 10 people, then you get much better deals and much better rebates, right?
Got it. Okay. So, what is the cost of transacting? Like, you want to drive it down to zero.
Yeah.
What is it that it costs you? And, there would be some cost for you also.
Yeah.
And what is it that it costs to the customer?
Yeah, exactly. So luckily we're an open order book or an open order book exchange. So what this means is that we don't buy and sell ourselves. We just help individuals buy and sell with each other, right? And so we charge about roughly 10 basis points, 10 to 15 basis points. It depends upon maybe 10 to 20 basis points on the maker versus taker. I mean that whether you're the one that hit the bid or ask. What I mean by that is that whether you actually you can say I want to sell Bitcoin for $40,000 while the price is $41,000, right? And what will end up happening here is someone has to come and buy it from you. So that's what like a taker fee or a maker fee is. So we charge fees there. And the other thing we do charge membership fees. The goal of this long term is we're trying to build a premium product where we have phenomenal benefits for our members, right? And there's also like network fees. Whenever you send Bitcoin on a network, you do pay a fee to the network. So we put a little bit on there because we have wallet costs and infrastructure costs. But like I said, my long-term goal is to be one of the highest quality exchanges at the lowest possible cost. So we actually compare ourselves to like what the large exchanges do, and when we're constantly trying to drive costs down every single day.
What is the network fee? Like, how many basis points?
Yeah, so that kind of depends upon like each network is different. But so let's say like sending like one Bitcoin on the Bitcoin network might cost like say 0.0004, and then we'll charge 0.0006. Like we'll charge a bit more than that because we have to do all the accounting and mechanism and actually do the send fees, things like that. Right? That fee actually goes to the Bitcoin miners. We don't keep most of that. Yeah.
Right. Okay. And so, what if you were to become like a zero brokerage,
like a zero
play, and like zero.
The idea is in the longer run we can eventually drive. I really do think we can drive the cost down to zero, right? And so my anticipation is that it might take 1 or 2 or 3 years, but once you're at scale, because this really is just a marketplace. You can if you survive and you can get enough people coming on board, the cost can be almost nothing, right? And that's what we want to do, because that's how India is not a super wealthy country, right? We need to lower the cost as much as possible to make it widespread. Yeah.
So, what stops you from doing that today and just finding investors to fund it?
Yeah, I mean that's the see. We could go. That's the whole thing. See, any investor who comes in is going to say, you can do this, but then they want an investment return, right? And so, but like I said, if we're driving costs down to zero, right?
That's a more sustainable way to do it.
Well, here's the thing: is how do we return the money back to investors, right? The thing is it. So we're trying to balance both growth, high quality, high service, and also getting a ton of customers, right? And so it is a delicate balance, and we're thinking about that. We're actually trying to figure out whether do we want to raise capital, do we want to go it our own, and we haven't decided yet for sure.
Yeah. If you were to raise capital, what kind of valuation would you be seeking? Like,
yeah, sure. I mean, you see a lot of this stuff now that it says I think CoinSwitch raised about $25 million at a $5 million valuation. Sounds like CoinDCX did too. Supposedly CoinDCX is raising capital at near $1 billion valuation. I would say I think Zebpay is worth around $500 million to $1 billion, right? So we're profitable, we're making money, we're growing. We don't need the capital, and so. We're open, we constantly talk with people, but I said because we don't need the capital, we haven't been actively thinking about it.
Okay. So, what do you think Zebpay will be like, say, 10 years from now?
Yeah. So that's the big thing is that I envision us moving more into becoming DAO-like. And what I mean, what a DAO stands for decentralized autonomous organization. And most people are like, what the heck does that even mean? What is, these are, I look at them is, imagine like the way, Bitcoin is digital gold. A DAO is like a digital company. And what does that mean? See, right now, a company has shares, has shareholders, customers, employees, their legal structures. In the longer run, like there's a really cool decentralized app called Uniswap. Uniswap is basically a DAO. And what I envision is, over the long run, Zebpay becomes more like a DAO and less. Yeah.
How would making Zebpay a DAO benefit Rahul?
Yeah.
Like, would you have like a lot of coins of that DAO then, and therefore that's how it would benefit you? Or,
oh yeah, so me,
because then you are no longer a CEO then, right? I mean, there is no such thing as a CEO for a DAO or like a founder.
Yep, exactly. In many ways, becoming a DAO, you have to be a little bit selfless. Like, so I would say Bitcoin is a little bit like this. Bitcoin's a DAO. See, Satoshi Nakamoto, if he kept all the coins of Bitcoin, he'd be even more rich than he is now. But he isn't that rich because he kind of gave it away. And so, like, if we become a DAO, in a sense, I'm giving up a lot of stuff, right? I'd be giving up a lot of equity and economic value. But the benefit here is by giving the value back to the customer and back to the consumers, right? The members win, right? And the members can decide. There's no CEO, but there's a group of people who are running it. And if maybe a group of like 7 people or a group of 12 people, you don't need tons. And then it's more open source. If any innovation happens, it's happening, through an open source framework, right? And if you go look at something, a really cool idea is like if you look at this, like these are things that are kind of like, let's say, if you go look at a browser, like a browser is open source, right? If you go look at like innovation happening, there's a lot of open, like Wikipedia, right? Wikipedia is like an open source encyclopedia, right? See, you could eventually imagine you made Wikipedia into a DAO, and then you know what? You have a premium version of Wikipedia, which costs a bit extra, but has, I don't know, some higher quality content. See, you could design Wikipedia into a DAO, right? And I'm not saying it's a good idea or not, but the point there is that in the future, new business models and new organizations will organize around token economics and DAOs than being venture capital backed and corporations.
Okay, that's like a pretty interesting vision of the future. So, I mean, you envision that, like for the last 20 or so years, I believe that, most studies say that inequality is rising. The top 1% is getting richer and the bottom 50% is getting poorer. But so something like what you are visioning as a decentralized kind of a future, would that like reverse this trend? Or
yeah, that's, I would say, a big part of, say, my personal belief, right? So I think I always use this quote. I always say this a lot. Is that, see, in my own personal mission, my goal isn't to make rich people more rich. What you're talking about, if you're looking at Bitcoin, you're worried about that. The rich is getting richer. It's, I want to make poor people not poor, right? And that doesn't mean poor people become rich. It just means is that if you can help people out of poverty, the world will be a vastly better place than helping rich people just have a ton more capital. And I think systems like this help solve that, right? Is if you can imagine Facebook is owned by the Facebook users. Imagine Twitter is owned by the Twitter users. Imagine you told me Google's massive, right? In fact, one of our portfolio companies, Brave Browser, really, really cool company. It's got 35 million monthly active users, 13 million daily active users. Amazing company, right? They are growing really, really fast, really because they're giving a lot of economics back to their users. You should actually go to brave.com, download the browser. You'll see some really, really cool stuff. If the more you use Brave, the more they have a really cool token called BAT, the basic attention token. The more tokens you make, you basically make money. How do I do that? It's because
Right. Yeah. So you can actually monetize your attention.
Yep.
Wow, that's amazing.
And listen, I've made $300, $400, $500 just for free browsing on Brave, right? And you can too.
Wow.
Just go to Brave, download it, and if you want to, you can keep it in BAT tokens, or if you want, you can convert it to rupees. Come to Zebpay, convert that BAT to rupees if you want. Right.
Wow. Okay, that's amazing.
And there's 4 million people in India who are doing this right now. Right.
So say somebody who's like earning a couple of lakhs a year, which means let's say he takes home 20,000-30,000 a month, and he's saving, let's say, 3,000 a month. Would you recommend to someone like that to also take advantage of crypto?
Absolutely, positively. I believe in this, with my heart and soul. And what I mean by that is that this is one of the best. This is the best place for capital. You should always keep a little bit of cash for emergencies. But other than that, I think Bitcoin, Ether, BAT, these tokens are going to be some of the best performing assets in the world over the next several decades, right? It'll be almost impossible for any other, asset to do as well. It's just because it comes down to supply and demand. It comes down to, trends. It comes down to technology. Based upon a mix of all the above, Bitcoin, Ether, BAT, these tokens are some of the most important innovations of our lifetime.
This would be as liquid as investing in, say, a mutual fund or something.
It's better. It's more liquid. It's 24 hours, 7 days a week liquidity, right? And if they ever go abroad, they don't have to wait. If they're in Singapore, they're in Sri Lanka, right? They can convert it into whatever they want, and then convert it back into that local currency. They can use it directly. I envision 10 years from now you'll be able to use your Bitcoin to pay for a hotel in Sri Lanka.
So these investment companies like Zerodha and Grow, if they start offering the same kind of product of like investing in Bitcoin, and so wouldn't that be like a pretty adverse event for companies
Zebpay?
like Zebpay?
Yeah, I think yes and no. Like yes, in the sense it's a new competitor, but no in the sense that I think the more the merrier. To be honest, I see as Bitcoin becomes more widespread, the price goes up, and you want a ton of people taking this stuff, like we do, right? Zebpay itself is a large Bitcoin holder. Like, we own Bitcoin on our balance sheet. We love it. We think other companies should own Bitcoin on their balance sheet, right? And so, Zerodha should move in. PayPal is already in the space. Grow be moving in. There's another company that we're actually talking about partnering with, a company called Vested Financial. Have you heard of them? Vested, really cool company. They help people in India buy U.S. stocks, right?
Okay. Right. Yeah. Yep.
And so if you want to buy Apple or Tesla, you can go through them. I think slowly over time, like a lot of, let's say, fintech companies will allow Bitcoin, and I think that's a win for everyone.
Right. And are you also planning to offer NFTs on Zebpay?
Yeah, so we were one of the very first people studying this stuff. We haven't announced it yet, but I'll go give you a preview now. We're working with a really cool company called Yat, and Yat, it's actually phenomenal. They've designed, if you go to y.at Yat, or if you Google Yat emoji, what Yats have done is they've made these really cool emoji usernames. And to me, what an NFT, really cool idea for people who don't know, it's a non-fungible token. The idea behind this is that you can basically give a token value to almost anything, both a physical world asset, but also a scarce digital asset, right? And people probably heard, someone's making an image and it's selling for millions of dollars. Images are just one thing. You can do this with, let's say, an MP3, with a video file, with even a piece of software, right?
Or like Jack Dorsey's first tweet or something like that.
Exactly. What Yats have done is they basically made an NFT out of emojis. So you can basically own an emoji. For example, you could own if you go to my Twitter profile, you'll see that I own Apple. So 3 apples in a row.
Okay.
And if you'll be able to type in Apple, for example, into the Brave browser. And what it'll go to my page. It's like a mix of a domain name, a crypto address, or an email address, right? And all these things will resolve in the back end. And what's amazing is they've sold tens of thousands of these things, tons of them, right? To tens of thousands of different people, right? And we're going to partner with them. We're actually launching a zebra token. We're really excited about this. This should be a zebra emoji, right? And the idea behind the zebra token is the more zebras you have, the more value you're going to get, right? Actually, I'd love for you to test it out, man. So the idea here is that, like, if we can build like an NFT with some unique, let's say, utility value to it, there's a lot of cool things, right? So example, you have zebra, heart, zebra, heart, zebra, like a 5-letter emoji username with your alternating zebras and hearts. This would be like your ID now. Like I could send you Bitcoin to zebra heart, right? And it can be Bitcoin, Ether, whatever. But what's also cool is you could actually make that your username, and it's censorship resistant. So in the long run, I think people will eventually make this will be like a really cool way for online identity. And Zebpay is actually one of the launch customers for this thing called Yat. We plan on integrating it into our NFT platform and allowing users. We want to allow our users to buy high quality NFTs like this.
So can you have fractional ownership of NFTs also? Like say a digital art which got sold through NFT. Can there be fractional ownership of that?
Yeah.
That is also like same as Bitcoin only, right?
Yeah,
it's like a blockchain contract. Okay.
For example, there's a really famous one called CryptoPunks. They're actually probably some of the most famous NFTs that are out there. You can kind of wrap them up and you can fractionalize them. So a normal CryptoPunk costs now, I don't know, call it $40,000 or $50,000, right? Just like a Bitcoin. See, you technically can't. You can technically only own one full CryptoPunk, but the cool thing about fractionalization is you can own like a piece of it, and that's what's happening. People are buying pieces of art in a sense.
And so, do you plan to make this available also on Zebpay?
Yeah. So we're working with a really cool team right now. We're incubating a team to figure out how we can help artists, creators, and all of the above move into the space.
If there's one takeaway from this conversation, then it's this. Don't wait to invest in cryptocurrency. Head on to Zebpay.com and start investing now.
If you like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in for a complete list of all our shows.
This episode of Founder Thesis podcast is brought to you by Long Haul Ventures. Long Haul Ventures is the long haul partner for founders and startups that are building for the long haul. More about them is at www.longhaulventures.com.